Good morning, folks, and welcome to another one of my videos. I hope you had a great weekend and I hope you are ready for this new week ahead. So, I have four pairs on watch today, and those are Pound Aussie, Dollar CAD, Kiwi Dollar, and Pound Swiss. So, on balance, after a lot of analysis, my favorite of these pairs is Pound Aussie, and we start off on the higher time frames as we always do. Okay, so we have this high here. Okay, we tap into it, we wick above it by way of this reversal structure. Okay, very clear piece of structure there. We have the middle section. We break out of that impulsively, which is what we typically see. Wick above this area of value, this standout area of value. This was a 1 year high, I believe. Okay, and then we plummet to the downside, and we're not just trading back below here now, but we're also trading back below here. This is about as textbook a structure as you could wish to see. Okay, so it seems logical to me that we would likely prices now consolidating. We have an impulse correction potential continuation to take us down to this area. Of course, we could go down to here, but certainly down to this area will be a solid higher time frame target, because if we just measure the impulse, okay, and we assume the continuation leg out would be of a similar length, that would take us down to this area, or at least this area. So that makes contextual sense. If we just zoom down, you can see we even have an expanding pattern in there, a little reversal structure. Okay, with the middle section within there. So that makes contextual sense as well. I also like the fact that we've impulsively broken this low and corrected underneath it, suggesting that price did not find enough liquidity here to send it to the upside, confirming the idea that this is an impulse correction continuation to push lower. Of course, when structures are this textbook, what happens a lot of the time is, price can break above and then start messing around, and then people think to themselves, what happened there? It didn't work. Well, nothing happens all of the time and nothing happens none of the time, as I often say. But we're not here to to be right, as I often say as well. Okay, we're not here to be right. We're just here to look at what happens the majority of the time. That's where a technical edge is. Okay. You can see on the 4-hour chart, we have the 1, 2, potential 3. We may be coming up to that area in a form of a 1, 2, 3 as well. Or if I drew that properly, if we got more of a middle section, we may get a 1, 2, 3 leading up to that 1, 2, 3. And that does actually make contextual sense to me, and I shall explain why. I've touched on previously how if you get a structure like this, okay, where you're anticipating the third touch and the middle section is just like a straight line. Yes, it corrects down here, but most of this is just a straight line. When you get a middle section within a 1, 2, 3, which is just a straight line, okay, what I've noticed is that you often get a structural approach, okay, but because of the lack of a kind of the textbook middle section like that, what I've noticed is that price will often give you a 1, 2, 3 structural approach like that, which has the textbook middle section in it. Okay, so that may be what we're getting now. Okay, but regardless of whether that is or not, we still have a standout 1, 2, 3. There's no subjectivity about this. We can see where the first touch is. It's not part of the impulse, it's part of a separate correction. So what I'll be looking for is the following. So I'll be looking for a tap into that area, and if we get it, okay, this is more of a 4-hour structure now, because I can see the structure on the 4-hour chart. That means that my lowest time frame for entry is the 1 hour. Okay, if this was only visible on the 1-hour chart, then that would give me permission, provided my entry criteria was met, to drop down to the 15-minute chart. But because this is a 4-hour structure, I'm going to be looking for a tap into that area, followed by a 1-hour rejection, and then I would look to get short, okay, and I would have my stop loss just above here, because this is the invalidation zone. So where is this trade idea wrong? Well, technically, we could tap into that to retest the back end of that and then drop, okay? So what I would do is my stop loss would be placed where the invalidation zone is, which would be just above there. So to give this room, if it tagged me in, to move a little bit higher to retest the back end of that and drop. So that's where I put my stop loss. I would trail my stop loss down to here for something in the region of 2.8. And then my target would be all the way down here. And once again, this is where I would use the mechanical management system. So I'd measure from that range down to there. I'd set a take profit at 90% of the range, where price can often pull back deeply, even if it's going to continue in the forecasted direction. And then I would trail my stop loss accordingly. So that is pound Aussie. Okay, so let's move on to dollar CAD. Similar deal with dollar CAD. So if we zoom out, similar thing here. We have this, we have that high here there. Okay, we near missed to it. Eventually, we take out the high that we near missed to. Okay, I was a bit mindful of how much volume it generated here, because when you've got this much volume, it's a potential that price can come back down, retest the back end of this volume, and then go long, which would have made contextual sense because we had that high set there that we near missed too. Okay, so that was always a possibility, but what I think would have been more likely, if we were going to do that, we'd probably get something more like that to give us that ball structure to then push higher, which would then start to give us more of that reversal structure leading up to that. But we didn't get that. What happened was price completely smashed through this high, and it's trading, more importantly, back below all of these as well. So this to me looks like another impulse correction continuation to push lower to potentially take out these lows, which just so happen to be the retest of the back end of all of that structure, which does make contextual sense because one, look what we didn't do. We didn't break below there. And I've said previously that if we're going to move to the upside, we tend to break below these higher time frame liquidity points. If we're going to move to the upside, we didn't do that. So price will naturally gravitate back towards that area. And then potentially, who knows, potentially from there, we move higher to take out that high that we near missed too. But we don't need to know, as Mark Douglas said, we don't need to know what's going to happen next in all scenarios to make money. We just need to know how to manage risk. And this gives us a good opportunity to manage risk, in my opinion and experience. So if we drill down, what have we got again? We've had the impulse correction continuations. Okay, a little one there on the break of all of this that dropped out. So the sequence is looking really good. Price left a footprint here after breaking that low. It left a footprint here. What did we do? We near missed to it. So we'll likely gravitate back towards the high that we near missed to. Okay. If we just zoom in a little bit. So on this one, we have, so if you was to see this as a three touch, okay, that would actually take us up to there, okay, which actually lines up with this little sharp move here. Okay, lines up with that little sharp move. Okay, so we had this, which retested the back end of all of this. Price then comes down, leaves a bit of a footprint, which actually lines up with this 1, 2, 3. That's a bit of a strange looking structure. So I'm more inclined to look at this high here rather than this, this kind of strange trend line angle. But we do have to be aware of that because there is a sharp move there. So in this instance, what I'm looking for is a tap into this area of value followed by a push down. Okay, some people might be doing this. They might be looking at that little wick there and go, yeah, but we've got that. Well, that's a subjective first touch, and that's a mistake that I used to make, marrying your trend lines up from something just because you want it to line up. Okay, that's a subjective first touch. So what are we looking for is a tap into this area, and when we've got something sat above just like that, I'm not looking for a 5-minute continuation. I'm looking for a push down and a 15-minute continuation, just for a little more weight, so that to help with the fact that price could do that, could give you something like this. If it was a 5-minute, do something like that, then tap into that high that I was just talking about, and then move to the downside. So by waiting for a tap into this area of value, which this high near missed to, I'm just waiting for slightly more deliberacy. And then if we got that, I'll be able to manage it down to this low for something in the region of 2.8. And then once again, my target would be all the way down there. And once again, I would measure well, in this instance, this would be the range that we were trading within. So I'd set the 90% area, take profit at the 90% area, trail my stop loss accordingly. And from a context point of view, if we measure that impulse correction continuation, that would take us down to that area as well, or beyond it actually. But either way, that makes a lot of sense. So that is dollar CAD. Okay, so Kiwi dollar. So if dollar CAD is moving short, then that implies dollar weakness. If Kiwi dollar is going long, that also implies dollar weakness. So there's an extra little confluence factor. I'm looking to get long on this today. You can see what have we done on the higher time frames. Okay, we didn't break below as such. We kind of wicked to the area, but we've got so there was always the possibility. This would have been better if we'd broken below, caught people the wrong side of the market, but that doesn't always happen. Okay, all of the time. And you can see that we're clearly in a run of momentum. If we just look at the weekly, you can see we've had that very, very bullish weekly. Okay, so I'm satisfied that this is not, price is not going to come back down to break below, at least not yet, before we get a move to the upside to potentially take out this high to complete this kind of structure. Okay, and as we drill down to the lower time frames, you'll see why, or I shall explain why. So we've had the push up. We have, so if we were still in this area, there's always a chance that we could come back down to fill that before moving to the upside. But if you look at what price did, okay, it blasted through this correction, okay, and it's consolidating above it, suggesting that price did not find enough liquidity here to send it to the downside, and that this is just an impulse correction continuation to push higher. So we may at some point come back down here to break below these lows to then move to the upside, but we're in a state of continuation to the upside at the moment. So I would anticipate us tapping into highs up here before we actually came down, even if we were going to do that. Okay, so if we just zoom in a little bit, so on the daily chart, you can see what are we doing. We're near missing to this low, which just so happened to be the retest. That happens to be the retest in the back end of that. So it makes sense why we would come back down to that area. We have this expansion in price. Okay. If we zoom down to the 1 hour, again, this is where a lot of people would do something. This is a little bit of a, you've kind of got this angle. You could plot a trend line. You've got that. So there's a bit of a subjective first touch here to some extent. If we just flip that upside down, yeah, it's a little bit subjective, that one. So what I'll be looking for in this instance, this one looks like it may take a little bit longer to be ready. Okay. But what I'll be looking for from this pair is the following. So I'll be looking for a tap into this area, followed by a push up, and I would be happy with a 5-minute continuation in this instance. We tapped into that and pushed back up because there's nothing really sat above. Yes, you can kind of, if you look at this on the 15-minute chart, there is a kind of a little bit of a hook there. But if we're looking for a push up, if we're analyzing this on the 1 hour chart and we get the, this is visible on the 1 hour, then this wouldn't be visible anyway. But at that point, if we've tapped into that, push back up, we'd be trading above here as well. Okay, so this is sat below all of this, so this becomes no longer relevant. Okay, so what I'll be looking for a tap into this area, followed by the push up and the 5-minute or the 15-minute continuation, and then I'll be able to manage it up to here for something in the region of 3.3. And my target in this instance, just because this is where price could pull back deeply, would be this high here. And the reason being is because you've got all of this structure here. Okay, we've got all of this. Okay, and when price breaks all of this, the footprint it left was here. Okay, after the break and of all of this consolidation, so it makes logical sense that there may be a lot of liquidity there, especially if it's a sharp move, and especially when you look at what happened from that area last time around. It moved off very, very aggressively. That gives me a clue that there's a lot of liquidity here, partly because this was the retest. If I just clean that up a little bit, it would be helpful. This was the retest of the break of this structure. Okay, so there's a lot of reasons why we would likely get deeper pullbacks there, even if we did continue in the forecasted direction. And what I'd do is I would set a take profit. So where's the range? The range is there. Whoops, what's that? Let's get the right tool on. I'd measure from there to there. I'd set a take profit there, which just happens to line up with that. Okay, that would give us something in the region of 7.5% to work with. And then I'd trail my stop loss at the same time. So that is Kiwi dollar. Moving on, pound Swiss. Okay, so pound Swiss is, if we look at this, so pound Swiss is last on my list because we have this high here. So we have the stronger magnet. Okay, so we have this long consolidation, which is what pound Swiss and pairs like pound Kiwi tend to do. The start of all of this was here. Okay, this is a separate structure. We break below. I think there was a higher time frame point there. We do this, and then we move back up, and then we get this long consolidation. We tap into the area, move to the upside. This is a strange sequence. So one of the reasons this is slightly lower down at the bottom of my list is because this sequence is not typical for a move to the downside. So when price is moving in a non-typical fashion, even if you get an entry on the pair in question, it's slightly more likely to move in a non-typical way because it's already shown you that it's moving in a non-typical way. Do excuse me a minute. Do excuse me, Rufus. My dog is biting himself, so sorry about that. But we also have an element of a very shallow one, but a head and shoulders pattern now. So even though the sequence was a bit strange, I'm satisfied that we've negated this strange sequence to a large extent because we've completely dropped below all of this, and we've done so impulsively. I like the fact that we have a near miss to that low, so it's likely that we may get this impulse correction continuation to push lower to take out this low that this low near miss to, and potentially go a lot lower. Maybe we would come back down to these areas because that would make contextual sense as well. Maybe we're pushing down to that area, but again, we don't need to know because all we need to do is be able to manage risk effectively. If I just zoom in, this looks like a bit of a V-shaped recovery. So we had this kind of structure here, but you can see prices consolidating above that, suggesting that this was not an impulse correction continuation. So why is price? There's no logical reason for price to just blast all the way to the upside. So what is price likely doing? It's likely trying to find liquidity from somewhere because it didn't find enough within this correction. So where is it likely trying to find liquidity from? Well, it's likely trying to find liquidity from this area here because you can see there's a consolidation sat there. Okay, one of the reasons this is lower on this list as well is because you could kind of argue it's not the clearest of structures. You could kind of argue that the top of the structure was there. Okay, you could also argue that we kind of broke below that. If we just look at this on the 15-minute, we kind of broke below that and consolidated underneath. So you could also argue that that's the consolidation. But regardless, you can see that there is a consolidation there and that we're gravitating back towards it. So what I'm going to be looking for in this instance is I'm going to be looking for a tap into the area because of what I've just explained. I'm not looking for a 5-minute continuation. I'm looking for a push down from this area and a 15-minute continuation, just once again for a little bit more deliberacy. By that point, I don't think this would hold much weight there that low. So the first sharp move where there was a sharp exchange of liquidity, it was actually there. So I'll be able to manage this down to that low for something in the region of 6%. And in this instance, I would actually set a take profit here, all things considered, and because of the slightly strange sequence, I would set a take profit there, which would be at that low, which just happens to line up with that. And then I would trail my stop loss accordingly, okay, for something in the region of 8.6%. So that's what I'm going to be looking for today, folks. This may be ready by the end of the day, which we'll see. We're coming up towards the start of the London session. But who knows? We don't know what the market's going to do. We don't need to know what the market's going to do. All we need to know is what we're going to do and know how we're going to manage our risk effectively. And that is all I've got to say on the matter. Okay. I hope you've enjoyed this video. The battery is low on my laptop, so I'm going to have to plug that in. Have a great day, and I'll speak to you again soon.